Hello and good morning, everyone. Welcome to Almus Market Mornings, your daily dose of global financial updates with me, Swaraj. The entire debt ceiling narrative has remained in the limelight and continues to be a point of major driver in the financial markets. Participants closely follow the statements, meetings, and tone of the members of Congress to derive clues on possible resolution. Many expect this to go down till the last minute, but we'll ask JK, who has been following this closely, to shed some light on this entire issue. One more important economy that has remained in the limelight has been Japan. First, with Warren Buffett being bullish on Japanese equities, followed by economic numbers coming much better than expectations. The PMI numbers flashed the highest rating since 2013, showing signs of economic expansion in the land of cherry blossoms. JK, what are your updates on the debt ceiling discussions and how are you reading the Japanese numbers? Will such a strong economic numbers finally lead BOJ to start withdrawing from its stance of accommodation?
Hi, good morning, Swaraj. So yes, we have lots of questions on our mind as we start the day. We didn't have too many economic numbers to digest yesterday, but the focus continues to be, as you said, on the US debt ceiling talks. After it was stalled in the weekend, we did see a good start on the discussions, and the statements coming from both Biden and the congressional leader McCarthy shows that talks are playing, and there have been no specifics, but apparently both the sides are working on a continuous basis to arrive at a decision. And a decision, some indications that a decision can come as soon as a day or two, and that's keeping the markets quite on the balanced side, although we have not seen any major reaction either side, either in the stocks or in the yields in the market. So I think things are moving in the positive direction. At the same time, the X date is also nearing, so, and there have been repeated statements from Yellen saying that it's very difficult to maintain the expenditures to be beyond June 1. So that's something that the negotiators are also aware of, and I think we will have some announcement, positive announcement well before the X date. That's on the debt ceiling. And as far as Japan is concerned, yes, I think we have been seeing lots of factors developing in the economy that which normally would have led to hawkish stance and positive statements from any other government, but Japan is in a very unique approach, and inflation at 4-decade high, and growth and consumption improving, and latest PMI is also showing that the manufacturing is expanding well. All that, then what we are seeing is yen is trading at multi-month lows, and really not very far from the 140 psychological level. This is all because the Japan central bank is not giving up on their easy money policy, and of course the rise in US yields in the last few days has also added to the upward momentum in the dollar yen. But definitely, irrespective of the US yields, ideally the Japanese yields should have been on the upsurge, but that has not happened. But I don't rule out that happening in due course. And there are some market experts who expect that it can happen in June. So it's really on the watch. Meantime, we might see it go towards 140, but not much beyond, according to what I feel. And yes, on the overall on the market yesterday, again, there were very little data, as I said earlier, but there has been, hawkish statements from some of the Fed members like Bullard and Kashkari. The hawkishness is more on a medium-term basis, in the sense that right now we have a convergence of view between market and the Fed speakers on June move. So June, mostly there is a consensus that there may not be a move by the Fed. There may actually be a pause. This is what even Powell indicated in not so many words, but yes. And even a few members yesterday also indicated that they might want to see for a month or so, but then At the same time, both Bullard and Kashkari, whose views are very closely being followed, say that the rates can actually go up after a pause, and that may be definitely towards 6% or more. So that is something that the market is still digesting. So that is where the convergence ends. There is more hikes that Fed members are seeing, but the market is seeing actually a cut later in the year. So that the big divergence beyond June is what we are seeing. And yes, there is no major reaction from the market yet. I think we want to see more numbers from the US economy in the coming days. That is what even the members also want to see. If the numbers support, they actually would like to see the rates go up even more. The nearest number that I am looking forward to is the PCE core price index, which will be out in this Friday, and of course before that we will have a GDP number also. So I think one has to keep a right now as neutral approach as far as US rates are concerned. A pause in June is not going to be a surprise for the market. So June meeting announcing a pause may not be an earth-shaking event, and it may actually be a docile event. But what is important is what Fed is going to do after the June meeting. Now, interestingly, even ECB is now somewhat leaning towards a pause after September. And what is now becoming a headline in Europe is longer is becoming more significant than higher. And yesterday we had a statement from ECB's Will Roy, who is saying that it's not how much further the rate hike goes, but how large is the pass through of what is already in the pipeline. So they're actually now looking at the lagged effect of the rate hikes that they have done so far. And they actually he thinks that normally it can take up to 1 to 2 years for the lagged effect of the rates to impact the economy. So he is not probably ruling out a pause after September. This is the first time that we are hearing this type of statement from Europe, and that probably is also capping further gains in the euro against the dollar. Yesterday we did not have much of a movement in the yields, but they were holding on to their gains. Slight upward movement was seen across the tenor, but not very significant. I think this is very reasonable, considering that we did have big swings in the previous sessions. As far as the dollar is concerned, again, it was a very very narrow ranged session with the euro and the GBP actually moving very little, but more movement was seen in yen, which of course on the weaker side of yen because of the higher US yields and also the risk sentiment not being so bad. A Chinese one, of course, after reacting lower to the verbal statement seen on Friday, once again trying to catch up at Friday's high of 7.07, and that is keeping so many of the Asian currencies on the weaker side as well. And commodity currencies are really sitting on their hands to see how the economic picture evolves in the US and Europe in going forward, and any impact on the demand would be negative for these currencies. As far as rupee is concerned, yes, once again we made a marginal new high yesterday at 82.85. Some indications that the nationalized banks were sellers at those levels, but really rupee is not showing any urgency to reverse to the downside. Even at these levels, it is at multi-month high. Although the momentum on the upside has somewhat waned, and which means we see the dollar rupee probably consolidating in time for some more time. And if there were to be any upward movement further in the dollar index from these levels, we might see an attempt towards 83. But really, I think it is getting shorter more, and there is a good chance that USD will pull back towards 82.60 or so before it really makes a next serious attempt on the upside. All in all, we are waiting for more news. Somewhat on the economic side also, we will have more data today and in the coming days. And but markets are really waiting for the big news on the debt and then on the other numbers going forward. Thank you.
Thank you, JK. And just summarizing the three key points which we discussed, starting with, of course, debt ceiling talks. We had a good start to this discussion after the weekend, and both leaders are showing some signs of the talks progressing. Uh, Japan is in a unique scenario. Growth and consumption is improving, but the central bank is continuing to maintain an easy money policy. This policy will again be under watch as we look toward the central bank for further actions. There were some hawkish statements by Fed members who are saying that rates can again go up after a pause as Fed takes more of a data-driven approach. All of this will, of course, be needed to be digested by the markets as there is a divergence because markets are expecting a cut toward the end of the year. What was surprising was the ECB leaning toward a pause. If you remember, in the previous few months, members were giving hawkish commentary, but this is now slowly changing. Maybe it will be a fight of which central bank will outdove or outpause the other, which may give further direction for the currencies. That's it from us today. Tune in tomorrow for the latest updates on financial markets. Thank you so much for listening.